The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 29th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Folks, hope you had a great weekend out there. Let's make sure that you and I, that we do all that we can do to have a fantastic week. And one of the best ways that we can do that is begin our day by knowing that fortune knocks at the doors of those that are prepared. In fact, Henry Ford, he said, hey, look, you can't really guarantee anything in the future. The best we can do is size up the chances, calculate the risks, and then estimate our ability to deal with those risks. And then Stevie liked to add this: take massive action, folks. Thank you to all you folks that took massive action and signed up for our Nadex TFNN trading competition. Folks are already making trades out there. I hope you are as well. It's going to be a great day because we're going to have winners along the way, each day winners. So this is a great week for us here at TFNN. Again, thanks so much for everybody participating in that and all the new folks that will be joining us in the Tiger's Den out here. We'll take a look at the charts this morning, see if we can come up with any maybe shorter-term trades out there. And one of the other things we'll do for the next couple hours, I'm going to share with you extraordinary tools that help us to identify where price is headed to. We'll look at that lightning bolt pattern, that A to B equals CD. We'll take a look at Fibonacci expansions and retracements. We'll take a look at the Rhodes momentum indicator, the TAS market profiles, Chapman waves. We'll look at everything in our book in order to help us understand where price is likely to head to. And remember, this is an interactive show. So maybe you're out there looking for a trade and you've got some questions about it. Well, the easiest way to get some input is just give us a call here at 877-927-6648, or internationally, you can do that at 727-445-1044. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow futures. They're trading off 145 points, trading out at 16,884. S&P down 18 points, trading out at 1958. NASDAQ up 42 points, trading out at 4,004. Russell off about 12 points as well. King dollar back 15 pennies right now. She's trading out at 85.62. A little bit of movement in the currency marketplace. Goldilocks up $6, trading out at 12.21. Silver up 2 cents right now, trade out at 17.55. Light sweet crude back 51 pennies, trade out at 93.03. Again, 877-927-6648. Give me a call, folks. Let's take a look here at what's going on over in Europe. The DAX right now is off 97 points. Let's go check in on the DAX and the FTSE first. Let's go see what they are doing. If we take a look at the DAX from low to high, we're just going to take a look at retracement levels. That means we're going to come off the August 8th low all the way up to the high that was put in on September 19th. We'll see that price is below the 0.382 retracement level. It's trading out at 93.94. Likely target here is the 9,300, 92.8, well, 92.80. 0.80 is your 0.618 retracement level out there. If I were to look at an A to B equals CD pattern, try to see if we can find a little Gertley buy pattern that could be setting up here. My A to B equals CD 1-to-1 would take us down 1-to-1.272, takes us to the level of 92.6473. So that would form your 0.618 Gertley buy pattern. Looks like to me that is where price is headed to inside of the DAX. If we go take a look at the FTSE out here, FTSE's trading out at 66.16, down 33 points right now. FTSE weaker than the DAX. If we take a look at the FTSE, come on, there you go. Grab that from the low on August. No, didn't grab it. I turned it off. From the low out here on August the 8th, to the high inside the FTSE. That was put in on September the 4th out there. You'll see prices traveling right now, right at the 0.786 retracement level. That's at 66.09. You're trading at 66.13. You know, when you start to get down towards a swing point, in this case here in the FTSE, it's the August 8th level, and you've got a retracement level that's going to be very close to that area, what price is likely to do is go down and test that swing point. So August 8th is really its target, the high of which is 65.97. The low is 65.28. If the FTSE closes inside 65.97, likely chance that it's going to go test at 65.28 before it releases any kind of information to us. A quick peek at the Asia last night. You had the Nikkei up 80 points. She closed out at 16,310 out here. Okay, I don't care about that alert out there, but thank you very much. If we take a look at it, what the Nikkei did was it popped right back up into its most recent swing point, which was September 25th out there. It was my system was telling me it's doing it on less relative strength out there, and that is true, but that can be resolved even tomorrow as price moves, potentially price moves higher out there. So the Nikkei looking pretty strong, stronger than the U.S. market, stronger than the DAX, stronger than the FTSE out here. Now, why is that not working? Okay, well, why is that? That's so weird. Wow. Okay. In any event out here, something new happened. Got to prepare for that. Now, let's take a look at the Shanghai out here. The Shanghai up 10 points last night. Shanghai also taking on a swing point. Didn't get all the way to the top of it. That high was just from a few days ago. That was from September 25th. The high is 24.76. You got up to a high of 24.73 here this morning, but this looks, or overnight it did. This looks pretty strong as well. That's on the Hang Seng. Let's just finish this off and take a look. I'm sorry, that was a Shanghai. Let's take a look at the Hang Seng right now. 449 points out there. How about that? I guess all the unrest over in Hong Kong perhaps having an impact out here. If we take a look at what it's doing, it's trading right now into the June 23rd level. So here, weaker than market when we take a look at the FTSE, at the DAX, and certainly as we go back and we now start to take a look at the U.S. market. So let's take a look at the U.S. markets. If you listened in on Friday's show, what I said specifically was that we were going to see a bounce. We got that bounce. It was a rather nice bounce. That was an easy call out there. And what I also said was it was not a bottom, that the markets were making a bottom. I said it's not a bottom yet. I don't think we're at a bottom yet. It's not. I've not gone long the markets, but we are in the phase of making a market. How about that? Of making a bottom out here. I suspect it's going to take the entire week in order to really be able to make that bottom out here. And what I do expect is I do expect a push lower. Now, if we take a look at our futures out here, that push lower may not even happen today. I don't know whether it will or it won't. I expect a choppy market. So as your pilot, if you were riding in the Rhodes mobile out here, I would say fasten your seatbelts. Of course, we saw the activity of last week. If we take a look at this, start with the strong indice out here. Let's take a look at the NASDAQ. If we take a look at the NASDAQ, no real damage so far. You're trading back into the August 18th area. Just means the market has been consolidating for that period of time. That's what, about a good 5 weeks, 6 weeks out there. Big consolidation. If we take a look at the strength inside the NASDAQ, coming from the swing point low on its August 8th session up to the high inside the NASDAQ, that so far has been put in here on September the 19th. You're trading right now at the 0.382 retracement level. 4,004 is its number. You're trading at 4,003 as we speak. Can the NASDAQ get down to 39.33? Yeah. Well, if it does that, does it change my opinion? Heck, no. That's called the 0.618 retracement level. That's a normal move for a price on the 618 level, not necessarily the price, but the 0.618 retracement level. That's a normal movement. That's just normal to pull back to that area before it forms its C point out here. Now, what do I expect it to actually look like as far as this bottom? What's the real signal that's out there during this choppy week? You know, if I switch over and take a look at the New York Stock Exchange, so now we're going to go switch over and take a look at the indice out here. One of the things that you're going to see is you're going to see one heck of a nice rising price channel that began to really establish itself back in June of 2013. We're in September of 2014 out here. And you can see that price has moved up into the bottom of it, moved up. It's moved down into the bottom of that level. Let me go ahead and expand this up on my screen here for you. Let me see if that works. There you go. So you can see the yellow lines on my screen. That's the rising price channel. Right now, today, the bottom of that price channel is right around 10,700. Even if that gets pierced out here, it won't bother me. What I'm really looking at is I'm looking at the price oscillator along the bottom. Last time that we saw a really nice, significant bottom form inside of the New York Stock Exchange. You can come back to, I'm going to come back into this period right here. So my eyes are really set on that bottom that was formed back in June 24, 2013, to be specific out here. And I'm really looking for this series of oscillator readings to get down to where we were down to. Well, actually, we haven't even gotten down that far as we did back in June. Back in June, it got down to about a minus 330 out there. Boy, if we get to a minus 330, it's going to be back up the truck all in with regard to the bottom being formed. Right now, you're at minus 138. You were down at a level of about 244, which is pretty good. So making the call on Friday that the market was going to bounce because it was oversold, just between that, between the one-day rate of change inside the VIX, between the trend that was up at 2.5, about the easiest call that you could make. Now, we never know how far the market is going to bounce. That's for sure. And we had one heck of a nice bounce out there. And then, of course, we have seen a sell-off since. It was about 10 o'clock in the evening. I think it was on the 10 o'clock chart that I was looking at. It got the wonderful peak G out there that got formed. And then we've seen the market sell off to the downside out there. So another great tool to be able to use in our trading out here. So I'm watching for a bottom to form, and I'm going to be paying attention to the oversold levels inside the price oscillator. It'll certainly, I'm open to both sides of the trade, always open to both sides of the trade. But what I see the market doing right now is actually forming the next big bottom out here. And this bottom I consider to be large enough to maybe take us through Christmas, take us through New Year's out there. That Santa Claus has decided that he's going to go ahead and arrive early. Last year, the Santa Claus rally did not begin until December 18th. So that was a little bit late to the party, and I think the elves were a little bit upset. So I'm looking for a bottom. What else will it be that we're looking at for a bottom out here inside of the market? Hey, that's really easy. We're going to be looking for a high volume low. Yes, that's right. Stevie said a high volume low, because that's the characteristic as we take a look at the QQQ. That gives us a real signal as to when lows are made. They're made inside the Qs with high volume out there. If we take a look at that session, another reason why it was pretty easy to call a bounce on Friday was because the Qs traded down with 68 million shares. 68 million shares. You come back and you start taking a look at the other bottoms that we have out here inside of the market, the significant ones. If you go back to April 15th, you're going to see 84 million shares down there. There was a little bit of a precursor took place on April the 4th, so it took a little bit of a little time period for that bottom to be made. That was with 131 million shares to the downside out here. And I expect that's really what it is that we're going to see. Now, what Stevie's doing here is I'm setting up the market. I'm setting up the expectation that I suspect we're going to be bouncing sideways to lower to higher. I mean, all over the place. What I'm really looking for, I'm looking for one big final push, that little exhaustion to the downside out there. And there's a reason why the Qs make volume, make lows with high volume out there. And I don't really know what that reason is. I just have some suspicions as to what that is because of some information that some really great traders have shared with me, and that was their opinion. And I've bought into the analysis as to why the Qs have been making high volume lows out there. You can go back and take a look at that low that was made back here in October 2013, 64 million shares down there. It's going to be a beautiful buy, folks. 877-927-6648. This is Steve Rhodes. This is TFNN.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 148, S&P down 18. So let's go check in on, we took a look at the NASDAQ on the daily chart. Let's go see what's going on inside the S&P 500 as we speak right now. Let's just take a look at just a simple ruler out here. That's our retracement ruler, and we go from the August 8th low to the high that was established thus far, September 19th. That was out at 2014.50. You can see prices just below the 0.618 retracement level, 1964. Pretty likely target over the course of the week would be to get down into the 1933 level out there. Remember, one of the things we want to watch for some kind of big volume push to the downside out there. That is the bottom. That's the one that you want to buy out here. But specifically, you got to be paying attention to the QQQ ETF for that. So that's what I would expect as one possible outcome for the week as we begin our week out here. We didn't see any kind of reversal sign that was on Friday. Just simply one heck of a nice, healthy bounce after that several moves up and down during the week out here. You can expect, I would expect, the same. Would not be surprised, let's say that. Now, that's going to be great for the Nadex trading competition that we've got out here, for our virtual trading competition, because that's what you want. So it's as if Tommy went ahead and just simply sent a request to the trading gods out there, and looks like he's going to get his request out here. You want to have a nice little choppy market out there in order to be able to place some trades. Let's take a look at the daily time frame here and take a look at the Dow. Dow futures, if we go from the, boy, I got this thing certainly decorated with colors. Let's go ahead and let me see if I probably shouldn't have done that, but I did it anyways. Let's take a look at its retracement as well from the low down here on August the 8th to its high, which was also on September the 19th. It's stronger, right? So it's stronger than the S&P. It's as strong or stronger than the NASDAQ, quite frankly. So how about that? The Dow is really the strong in this stage. It's taken over the strength inside the marketplace. It hasn't even made the 0.382 retracement, which is 16,845. But if we see the market to correct a bit more, 16,576 would be its target. So I just gave you one clue. If you're going to short the market, is it the Dow you want to short? Is it the NASDAQ you want to short? Or is it the S&Ps that you want to short? Yeah, exactly. I would say stick with what is weak out here. And speaking with what is weak, potentially weak, let's go take a look at the Russell 2000. If we look at the Russell 2000 right now, it's traded down to the 1 to 1.272, A to B equals CD to the downside. That was the same level that it got to back a couple days ago on September 25th out there. Its next level is down at the 1084 mark. But if we go ahead and put this on the continuous contract, let me do that out here. Let me actually do this. And the reason why I want to do that is because we want to go ahead and take a look at the consolidation pattern out here, because this is really the level that we want to be, whoops, I didn't mean to do that. This is really the level that we want to be paying attention to inside of the Russell 2000. Let's pull this back here. And that's the old consolidation. That consolidation inside the futures contract takes us back to a price level of about 1079. You're trading at 1101 right now. My expectation is that the Russell 2000, what I'd like to see here, doesn't mean that I'll get it, but what I would love to see is I would love to see the Russell 2000 smack down into that 1079 level, hold, and then at the same time see a nice high-volume low inside the Qs out there, a nice high-volume trading session inside of the Qs. The combination of that would then go ahead and put our back up against the wall. The bulls back up against our wall is really what I should say, because you crack that, what you've got here inside of the Russell 2000, you've got a 130-point consolidation range. The top of that consolidation, that's really up here at the level of about 1212. So you're going from 1079 to the 1212 area. I think that works out to be 100. What's that? That's actually more. That's 180. That's no 80. 20. Yeah, it's a 130-point consolidation, give or take a few points out here. So that's what I would expect that we would see. Now, what's really kind of nice with regard to the market overall is if we go take a look, go back to the, I'm switching back and forth here. If we go back and take a look at the IWM, and if we look at that closed out at 111.22. What the IWM did was it tested a swing point with light volume last week. That swing point was the August 1st level. At 67 million shares, it tested it with 49 million shares. If we switch over and take a look at the weekly swing point was also tested with light volume out here. The weekly swing point that it was testing was the week ended July 28, 227 million. Came down, tested that with 207 million shares. But, of course, what we really want to be watching is we want to be watching the consolidation level. Also, the swing point from February 3rd, that had 315,000 shares out there, but price closed inside that swing point. So the beauty of the setup and the real read here, the real signal of the market, when the IWM closed inside that swing point from February 3rd out there, it said, hey, Steve-O, tell everybody that's listening to that TFNN that I want to go test 107.27, and then I'll give you the signal as to what my next move is. That's what we should expect inside the Russell 2000 IWM ETF. This is Steve Rhodes. This is TFNN. Thanks so much for joining us, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 169 points, trading out of 16,944. S&P down 18 at 1964. Composite off 45 points at 44.67. Russell 2000 off 11, trading out at 11.07. We've got Goldilocks up 5. Silver is basically flat. You've got platinum is up a couple of bucks right now. Let's go check in on the currency pairs out here, see what we've got going on. You got the euro. Let's actually trade. Let me switch over to the futures contract, because there's no delay. If I switch over, and we'll take a look at that. So you've got the euro trading out at 1.2707 now. In today here, we've seen no reversal yet inside of the euro. It's extremely oversold. I do mean extremely oversold. So it's due for just simply an oversold bounce out here. Of course, inside the euro, if you were to see a close above Friday's open, that opened, by the way, at 1.2757 out there, you'd have your first reversal signal, bullish engulfing candle. This looks like a hammer, smells like a hammer from September 25th, but there was no hammer candle out there. So we'll want to watch for the euro. Of course, the euro, if we start to see just simply a little snapback rally, and I really think that is the potential trade that's out here. I don't know if the timing is going to be this week, but it would be a beautiful setup, a beautiful trade inside of the Nadex platform out there. So maybe one of the longer-term trades that you would go ahead and set up. And everybody is on the other side of the boat out there when you take a look at the euro. So there's no one calling for any kind of a snapback out there. Of course, that's usually when you actually see it occur. No reversal signal yet, at least on the daily time frame. Let's switch down and take a look at a shorter term time frame. Let's go take a look at a 60-minute. Let's look at an hourly chart out here for the euro, see if we can find any signals of any sort out here as we take a look at it. Let's take a look at it. Looks like at this stage here you've completed an A to B equals CD pattern on the 60-minute time frame. The low's out here at 1 a.m. That's out at 1.267. Your B point out here at 3 a.m. Again, it's an hourly chart we're looking at. Your C point of retracement down to 5 a.m. So you've hit the 1 to 1.272 A to B equals CD. It's actually out at the 1.272 mark. How about that? Is that pretty wild or what? So the 1.272 expansion was at $1.2720 out there inside of the euro. At this stage here, you're seeing a bit of a pullback out here. The real key, when you've completed A to B equals CD, which you may have done during this 1-2 hour session that we're looking at, because that's a bearish engulfing, that completed here at completes at 11 a.m., began at 9, so it really just began. We'll have to see how this plays out here. But it would really be the pullback. So, again, it's a 60-minute chart that we're looking at. If I just simply take a look at retracement from high to low inside of the 6E, inside of the futures contract for the euro, a normal pullback would be to the 1.269 level. So if you pull back, if it pulls back into that 0.618 level and then moves away from there, then you would start to see the euro potentially begin making A to B equals CD patterns to the upside. You can even go down to an even shorter term chart. Why don't we just do that out there for the benefit of those folks that are trading, trying to come up with a trade today. So again, here's the same thing, just on a shorter term time frame. I wanted to see, and so this is really, if we take a look at it, this is the first A to B equals CD to the upside that we've seen inside of the euro since the trading session of September 25th out there. So we're at September the 29th. So this is the first A to B equals CD to the upside. Now the real key is going to be the retracement. And what does that look like inside of the euro? So the natural pullback is to the 1.269 level. And if it doesn't do that and it continues to move higher, that on a shorter term basis would be a signal that you are starting to see that at least that snapback rally, at least that oversold condition begin to work off. If not, in fact, a change in trend. Yeah, that's right. You heard it here and you heard it here first. Maybe it was second, because maybe you listened on Friday or maybe you listened in last week. But we're going to see some amazing things inside the currency market. You're going to see an amazing thing take place inside the U.S. dollar index, which has been as strong as you possibly can get out there. And you're going to see it just absolutely get crushed. Yeah. Steve-O said crushed. And that is going to be an amazing thing when you start taking a look at what goes on in the overall commodity sector out here. And, of course, in order for that to take place, really, what that really means, you're going to have to see the euro make more than just a little bit of a snapback rally. I can't tell you how it's going to happen. I just know that it is going to happen. What I can't tell you is whether that's going to happen today, whether it's September 29th is the beginning of that, or it's the 30th, or it's October 2nd, but it is coming to a theater and a screen near you out here. And that is that we're going to see the U.S. dollar index pull back much more than what anybody else thinks, other than what I believe we're going to see, which is quite a pullback out there inside the U.S. dollar index. Timing, though, just going to have to simply watch it unfold. And one of the things that we've got to do is really watch what goes on inside its basket of currency pairs. And that means we've got to really pay attention to what goes on inside of the euro. If we go take a look at the Japanese yen out here, of course, that has been on fire. Let's go ahead and populate this. Now, we got a little doji candle out here on the trading session. Well, this is a 15-minute. What the heck am I talking about? This is 15 minutes. Let's go back and take a look at the daily out here and see what it is doing. Now, this is the opposite of the currency pair. Let me switch over to the currency pair and give you more of the standard look that you are used to out here. So I've got about a 10-minute delay on this. Let's Let's not worry too much about that. But let's go take a look at the Japanese yen trading out around the 109.27 level out here. Now, what we know about the Japanese yen, what you and I know, is that it's hit that 1 to 2 A to B equals CD to the upside. That was at 109.45. Has not been able to crack that level. Doesn't mean that it can't crack it, but what we have seen here is we started to see a series of small-bodied candles at the highs, and those are and when you've done a 1 to 2 A to B equals CD, typically you have a change in trend that is going to unfold out there. You get these small-bodied candles; they give you a signal as well. Today's candle, as we speak right now, looks a little bit of a doji, but too much time left in the trading session out here. But wouldn't be surprised to see the Japanese yen currency pair pull back. Now, in this case here, if it pulls back against the U.S. dollar index, against the U.S. dollar specifically, it would actually be getting stronger, and the U.S. dollar index would be getting weaker. So you've got the euro that is overbought, you've got the U.S. dollar Japanese yen that is extended, and that too could be pulling back out here. That would put some weakness into the U.S. dollar index out there. So there's two currency pairs that help with the setup of Stevie answering the question, well, how could it happen out there? And then we'll take a look at the Great British Pound U.S. dollar. Let's go see what this has been doing out here. Right now, trading out at 162 approximately out here. This has been has worked off an oversold condition out here. We have seen some reversal signals inside this currency pair out here. What it hasn't, well, let me see. What it hasn't done is broken a trend line. So let's go take, well, I don't know if it has or it hasn't. Let's go take a look at it. There's your trend line. No, it hasn't. Now, usually I have that in white. So let me do this here. It makes it a little bit easier to see. Let me just grab this as my arrow key. So here's the current downtrend. We'll come back. We'll take a look at the, start right there. Right here is what I want to go ahead and focus on. And this is what I'm using as my trend line out here. Let me turn off the market profiles just so you're not too confused with too many lines out here. So let's turn those off. There we go. Okay. So now when we take a look at the Great British Pound, what I'm using is my, as I'm using the high from July 15th out there, 1.719. We're using the high out here from the trading session of August the 13th. That's out at 1.684. And that's been a really good trend. We've seen the Great British Pound try to get up into that level. It did that here on September the 18th, rejected it, moved back a bit lower. Now, what it's been doing nicely here, it's been making higher lows as it has run into this trend line. But we want to watch this because if we can see the Great British Pound move higher out here against the U.S. dollar index, that too would then all of a sudden be another reason to say, okay, we're going to see the, and a normal retracement, just so we take a look at this. If we're seeing the beginnings of a change of trend, and I believe that we are, and I believe it's going to be something pretty spectacular to watch out here, is that we should see at least a move up into the 1.675 level. In fact, if we probably sets up the next Gartley sell pattern, if we look at the A to B equals CD pattern come off of the low out here from September the 10th out here. That's what I'm going to use my A point. I'm going to use my B point, this high that took place on September 19th. And I'm going to use right now, because I don't have anything else to use, I'm going to use the low of today. And if the low of today happens to be the low for the C point, I'm not saying that it is. We need to go down, really take a look at some intraday charts out here. But if it were to occur like that, the 1-to-1 A to B equals CD to the upside gets you to $1.67, maybe $1.68 out there. And that would set up your actual potential Gartley sell pattern. You really have to take a look at the candles, the size of the candles, reversal candles, in order to be able to maybe sell the Great British Pound there. But that is, this would also be changing the trend. So you need to be careful on that little Gartley sell setup out there inside of the Great British Pound. That's taking a look at the daily chart for it. In the meantime, right now the Dow's off 145. S&P is down 15 points as we speak. Let's go take a look at some things that are moving and grooving in the marketplace out here. Let's go take a look at Priceline. PCLN is a ticker symbol. She's trading out at 11.52, down 22 bucks. Let's go see what Priceline is doing out here. Looks like I didn't want to turn that on. I wanted to turn this on out here. Let me see. Don't turn that tool off. Okay, so we take a look at Priceline. We know what Priceline wants to do, right? Pretty simple, actually. Let me turn this off. If you just took a look at this naked chart out here, I mean to turn that off. I meant to turn this off. Let's turn off the moving averages. If you just started with just this blank chart out here, I'll leave the, and you were just looking at this, and you were going to target where is price going to go to at some point in time out here. What would you say? What sticks out? when you take a look at this. Yeah, exactly. No question. What sticks out is this trading session right here. Big volume, a high volume low that's been untested, the low of which is down at the 1087.26. You can see that price is trading right now into the top of that, which is 1152.98. I believe that's the top, 1152.98. Volume there, 2.6 million shares. Now, we've come down into that level twice now. Once on the trading session of September 15th, volume down there was only about 829,000 shares. Then on September 22nd, only 679,000 shares. So far today, you've done volume of 168,000 shares. Not enough to say that Priceline is really, in my opinion, is going to go ahead and get much lower than that. Of course, the ideal trade inside Priceline would be to get down, test that May 8th low, do it on lighter volume, then reject that price, get back inside the low, 1087.26. You'd have a rejection of a high volume low swing point with light volume out there, and that would be a nice potential trade to the long side inside of Priceline. If we take a look, so that's what's going on there. I suspect that will be hit. It doesn't have to. The top of the swing point on a high-volume swing point can be where you see your test actually take place, but your preference is to see it get down into those lows out there. We've also got moving. Oh, do we have moving? What? Oh, my goodness. Civio Corp, unless the heck is going on here, continues as a C corporation. Yeah, what's the news there? Wait, let's see here. What did they this company is called, what is this? It's the name of the Civio, CIVEO Corp out here. That's board of directors completed assessment of structural alternative for the company and concluded that it continues as C Corp. Yeah, so it was real estate investment trust out here. We'll take a look at this thing. This thing here is a drop-in. Wow. That's all. We got a daily chart. Well, this thing is in uncharted territory. Trading down at $13.56. Looks like it was an IPO from back in June. Looks like they took everybody to the cleaners on this equity. Let's take a look at Tonix Pharmaceutical. Holy cow, 56% out here. Looks like they have not cured cancer or anything else along these lines out here. So this thing down with some big volume. Let's see where this is trading back. So how about this? Traded all the way back, or it's trading all the way back into the area where it had its first sign of strength, at least that I'm looking at on the chart, which is back to November 25th, 2013. It had 261,000 shares to the upside there. The low was 440. You're trading at 615 right now. The high was $5 on that. Looks like that is where that is going to head back to at a minimum. I hope nobody is holding that equity position. You've got the ProShares Silver Short, that's getting walloped here this morning. That's down about 5%. Google off about 0.6%. Not a big deal there. Salix Pharmaceuticals, SLXP, that's trading off about 2%, down $3.32. Let's go see what this is doing out here. Now, this is a strong-looking stock chart. Let me pull this back just a bit. So this thing most recently made highs with volume. Those have not been tested. Had a breakout session on the trading session of August 19th, wide price spread, accelerated volume. If this thing ever pulled back to 138.17, that could be a nice setup out there as long as it does it on light volume. Don't know that it's really going to pull back here. Right now, it's just simply consolidating at these highs because that nice session on September 23rd and the 24th, another 5.7 million shares to the upside and pulling back on light volume. Today, so far, 240,000 shares. So it does not look like any danger in Salix Pharmaceuticals as we speak at the moment out here. If we take a look at Wynn Resorts trading down about 1.5% off $2.76 right now. Wynn Resorts, what does this have? This has an uncompleted A to B equals CD to the downside. Confirmed. That should take it down to about the 160 level. Right now, folks, we've got the Dow trading up 116. This is Steve Rhodes. This is TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 150. S&P is down 17. We had a call from Mike in Thailand. It's always wonderful to have listeners, viewers from around the world checking in with us. His question, he's not on the phone with us right now, but his question was, what are the top 3 sectors of the stock market that are currently overpriced? And so I'm going to assume that that question maybe relates to the trading competition. Maybe it does now here. But we take a look at the sectors. You've got the S&P 500 broken down into 9 39 sectors. The numero uno weighted sector inside the S&P 500 is the XLK. If we take a look at what the XLK is doing as we speak, we can see it's pulled back thus far. If we take a look at its retracement, it's pulled back really with light volume. If we take a look at its retracement out here from the August 7th time frame to the high that was put in on the trading session of September 18th, you're going to see that prices probably hit it for 39.17. It's 0.618 retracement level. On Thursday, it pulled back with 9 million shares. On Friday, it bounced with about 5 million shares to the upside. It made a high out here with 7 million shares out here. The XLK still looks to be pretty good. It was not in an oversold condition, or overbought condition, I should say. So the XLK was not overbought, or has not been overbought for quite some time. So that condition itself has been worked off. So that is not certainly extended, but looks like that should pull back to 39.17. That at least is its next level. Number two weighting structure inside of the S&P is the financial sector, the XLF. It's down 21 cents right now. If we take a look at the XLF, even stronger than the XLK, than the technology sector. We come off of its low from August the 5th out to the high that was put in here. Well, slightly stronger, I should say, to the high that was put in on September 19th. We'll see that it's trading below its 0.382 retracement, so no reason for it to not get to 22.77. She's trading out at 23.09 as we speak. Volume today, about 5.5 million shares. A couple days ago was 54 million shares. We've been trading for 26 minutes out here. It is not overbought at this time, so it is not really what I would consider to be an extended sector, that being the XLF. Number three, XLV, from a weighting standpoint. The XLV, is no longer really extended. With the market, the way that it moved last week, up and down, little seesaw out there, the XLV is actually the stronger of the sectors, one of the strongest of the sectors. I believe it's consumer discretionary that's even stronger, but they have to go back and take a look at it. You can see in the case of the healthcare sector, the XLV, it has not even made the 0.382 retracement. The move sideways to slightly lower over the course of the last week has worked off any kind of overbought condition that it had out here. So the XLV, if the market does as I believe that it's going to do, which is going to make a nice low over the course, maybe it's this week, it could be any time, but it is going to, in my opinion, it's going to make a nice tradable low out there, a very nice buyable low. The XLV would be one of those sectors that you'd want to go ahead and take a peek at, because it has held up very well during this last week out here. We can see that just simply by using our retracement tool out there. We can take a look at one of the sectors that has been weak out here. Right from weakness, we may find strength. Yes, it is, because that's how it works in life out here. If we take a look at the XL, it doesn't work any different inside of a stock chart out here. So from the XLE, from the energy sector, it has traded all the way down. It's now made a 1. It's on its way to making a 1 to 1.272 A to B equals CD. Get down into the $90 area, $89.93 would be that number out here. We'd really have to pull this back a whole heck of a lot further, and I'm going to have to do that. I'll try to do that during the next show as well. So, folks, it is magnificent, marvelous Monday. Thanks so much for starting your day off with us. Good luck to all of you in the TFNN virtual trading competition. There's going to be winners today. I sure hope it's you. Have a great Monday, folks. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.